Get the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at technical charts and try to understand what happened in the market during the previous week and then also plan for a better trade for the upcoming week that's starting tomorrow, March 17, Monday 2025. So let's right away get into the charts. Look at this, Nifty, weekly charts on the left side and daily charts on the right side. It's a panel channel bottom, and there is another panel channel within the panel trend channel, and price seems to be somewhere very close to the bottom of both the channels. Right? That's where we are, and it was an up move week previous week, and this week we see that there is some selling pressure and then there is some consolidation that has happened. On the daily charts, we can clearly see that consolidation within the channel. Banknifty, on the other hand, is an ascending wedge almost, and seems to be at the very bottom of that. And on the daily charts, you see that it's made a new swing low as well after breaching that consolidation zone of the panel channel. So that's what has happened previous week. So basically, it's almost a flat week. 158 points down. Consolidation with volatility of 0.70% is what happened in the Nifty, and overall the correction is 16.4% now. But that's after a 72% bull rally from 2022 June. Now the banking index is also showing that consolidation with a negative 1%. That's near to that 0.91 at 441 points, and that's after making a very tight new swing low, 12.45. It's nearly 12.3 or something. So that's exactly what has happened. And candlestick wise, we see that last week, if you look at only the body, it's consolidation inside the previous green body, and otherwise its volatility can be seen from the big sizes, and consolidation, a retest, and new swing lows and then immediate bounce can be seen on Banknifty. So the wick is negative for sure, but it's not solid negative. The wick indicates the struggle that happened in that zone. And daily 4 days, it is a truncated week, so last 4 days shows a V-shaped move. In Banknifty, it is more evident. So it's very volatile consolidation that has exactly happened on the Nifty and the Banknifty. Bollinger Band wise, you see that there's an expansion that's happened now after a while in the Banknifty, and it's with the bearish bias. On the Nifty, it is still consolidation. So Banknifty Bollinger Band is saying that it's tentative that it can expand towards down, so the price can fall down further. Momentum and the trend indicators we're using the RSI and the ADX for the trend. So RSI momentum, if you see, it is in the bearish zones for all except for the Nifty Banknifty, which on the medium term it is at the fall down. Left side you see is what medium term, right side is short term daily. Right, so everything is bearish momentum except that, and Banknifty is at to fall into that bearish zones on the medium term charts and the weekly charts. So bearish momentum all over more or less with respect to the RSI, and the trend is remaining the bearishness and is having rising strength also. So that's a summary of that. And the volatility index, the India weeks, is showing that this volatility index itself is volatile. You can see that it tried to move up 8% before it settled down to close with 1.5% fall further. So net to net, its market is struggling, and VIX is not rising. That's kind of a contradiction, right? Not too much low also. It is not gone to the 11 or 12. It is still near the borderline of the medium volatility. So it's right now dipped to the 13 levels, in spite of the fact that the market remains weak, and there could be an explosion that can happen any time. Right? The only thing is we don't know it's downside or upside. Right? But this can be positive for the bulls. The fact that which is not rising, the fear is less, and then I say. Now looking at the open interest analysis, the open feet, it's bearishness all around here, except for the fact that Nifty's open interest is bullish. Otherwise, futures open interest is bearish. March 23 weekly is Nifty is bullish, but Banknifty is bearish, and that's about so Open this also is giving some levels. Look at levels for the next week on Banknifty. March 20th expiry weekly, 2300 and 23,100. So that's 800 points, very tight range. And second, that's what the highest put and call writing is. Second highest put and call writing in Brazil is 22,000 and 28,000, 22,800. Right. In Banknifty, it's a monthly expiry, a lot of time. 48,000 and 49,000, very narrow range, 1,000 points for a monthly expiry. That's what the range. So consolidation was indicates 47,000, 48,000, second level of highest put and call writing is seen at that level. And PCR and futures are showing bearishness as we have seen earlier, except for Nifty, which is climbed the above one. So the levels of problem resistance and support can also be found from the charts, in addition to how we have found it from the open interest of the options of weekly and monthly. Now, from the charts, basically the first resistance for Nifty would come with a gap at 22,720, right? That is clear. It can go to Fibonacci 61, and the 50 DMA is coming very close to that at 23,000 gap. So 22,000 is the rounding number as well. So a lot of resistance can come in at 23,000 and 23,150 that levels. That is clear. Then 23,470 is where the 100 exponential moving averages. Then 200 exponential moving averages coming at 23,570, and that's going to be a major resistance. After that, it's 23,893 where the previous resistance, and Fibonacci 23,750, Fibonacci 50 retracement and all this comes in. So that will also be any move above the 200 exponential moving is confirmation that okay, the reversal or the bottom is found, or at least recovery starts from that. So until then, we don't know what is going to happen. Now, downside, if we see the supports can be seen 21,964. 22,000 nearby is going to be very good support. So previous rounding number as well. That is gone, then you can find support at just 21,792. That's good zone. 21,710, and then 21,530, 21,281. Likewise, towards the bottom of the channel. That's where the supports are for the Nifty. The Banknifty, the levels of resistance will be at 46,589 and 48,589. Sorry, and then Fibonacci 61 retracement resistance at 49,277 to 86. That's almost 50 exponential moving average also comes in there. Then 49,650. Then 50,100 is where the 200 exponential moving average. 49,336 is where the 100 exponential moving average is there. Right. Fibonacci 50 is at 50,286. So 5,200 to 50,000 is going to be a major range of resistance to take out for the Banknifty. That is clear. It can just climb to the top of that. So until then, we'll face resistance downside. Fibonacci 78 previous single lows at 47,841. The new single low is very close to that at 47,700 nearby. 47,000 is going to be a very good rounding number support, and then 46,947, 46,574 previous single lows, and 46,000 is going to be a good rounding number support. Previous single low comes very close to that in 46,77. So those are the support resistance level that's marked here. We can make out the 20 demised exponential moving average. Gap is window gap, rounding number RN, and Fibonacci 61 previous single low PSL, right? Rounding number. So that's how the levels. Make note of that. Correlate that with the open interest for the weekly or the monthly, and accordingly take your bets on resistance supports. Let's move ahead and then try to see how the different sectoral indices have performed. The IT sector is basically everything is down, right? Except that pharma and FMC had a flattish performance, absolute flat up move of 0.03, 3 or 4 like that, right? Otherwise, auto, metal, IT, reality, all of them have fallen down. IT has hit badly, 4.5% down. Everything bearish. Metal 1.7% down. Momentum sideways from it was performed slightly, but this week it was again fallen down. Auto is 2.3% further down. Everything seems to be bearish with respect to the momentum. And pharma and J2 is flat, and reality is also 2% down. So if you look at the charts, you see that it's sort of make or break point for the IT. Any breach from here could easily see another 12% of fall. Already this 25% corrected. No, the 12% correction could come in. No. It's at the bottom of the parallel channel. As it now, trend is bearish. Here comes the momentum and the trend indicators. Metal was consolidating, found the bottom somewhere at the parallel channel, and then was bouncing up, but fetching some hurdles. But as we know, it's the only sector that's not bad. Metal, sideways at least, those are all real zones. Auto sector is a lot more space to fall down towards the 18,000 levels also. to the bottom of the 12-line channel. Momentum is trend, both indicators are bearish. Pharma is at the bottom of the channel, so it was trying to recover, climb to the sideways. Let's see what happens. FMCG also has hit and corrected substantially to the bottom, but finding it slowly trying to climb back in the sideways. Has not happened yet. So overall, pharma and metal are the only sectors which are at least trying to maintain the medium-term momentum in the sideways. Realty unable to climb in the sideways zones. A lot of more space to correct as per the price pattern. So that's a summary. So overall, it's a fact that we have to admit that everything is bearish. And previous week, everything went down except for the pharma and the FMCG, which tried to consolidate and then had a flattish close. And IT got really hit bad, 4.5% down. Let's look at the heavyweight stocks. The HDFC Bank is holding on. It's still sideways and trying to move up or consolidated within that channel. So that's a really good thing. At least it's not dropping. If that is working, then the entire Banknifty and the entire Nifty index will follow. Reliance also seems to have found the bottom at 2,150 levels and they're trying to move upwards. So such moves happens, then it's fine. HDFC Bank also doing good sideways. Seems to be moving up. So these three heavyweights is what is holding the market from getting crashed. The market Infosys is backing down from the upper handle. Momentum bearish in both TCS and Infosys, both black. As usual, it's consolidating sideways up and down. TCS also is trying to climb back just in the sideways. So overall, sideways momentum for all the heavyweight stocks. Heavyweight stocks are holding the market, you can see. So buying is happening only there probably. All these HDFC Bank, Reliance, HDFC Bank, and ITC. So it's the banking stocks that's holding the market, you can say. It's very evident out of the 7 critic stocks or heavyweight stocks. We see that it's only the banking stocks that primarily supports, while ITC is trying to hold on after a correction. So when we look at the broader market indices, the mid cap and the small cap, you can see that that's also getting weaker and weaker and remains in the bear zone. That's the momentum by the trend. It's at the bottom of the channel, trying to hold on that. Any breach from here could make the correction really big. So let's keep a close watch. In spite of all this correction that has happened from 51,000 to 48,000, it still is weak, but it may find a support at this zone because the trend balance and keep a close watch. So otherwise, last week was bad. Quite rich bearish moves with momentum trend both indicating bearishness in the broader market from mid cap and small cap. Let's see how the foreign institutions are participated. So it is a truncated week, but not big selling did not happen. Right, whatever FIs has sold, he has managed to buy back. So it's balancing, but the fact is that last week also the FIs continue to be selling, nothing but selling. The relativity side, the FIs are moved up last week, the questions on the net longs. Right, so it's a summary that you can see. Every single day selling continuously for several months, and money is flying out, and domestic institutional confidence, return money is flying in, as IPs are flying in, and holding the market. But how long? Let's try to understand how the global markets, especially the US markets and the global commodities like gold and crude oil, and then currencies. The USD/INR, we can see that it has fallen back to that consolidation zone and then going down. So that's a good thing considering the dollar index really affects the emerging market. So it's cooling off, that's good. And you can see the cool off in the USD/INR currency there also. There is a red. It's not much of a move, it's a flattish move, some downside, 0.2%. It's not a big deal, but it's just fallen below the 287 USD/INR. Some strength is there, but it remains with the weak, historic weak for several years now. Look at crude oil, you see that is also pulling up, which is also very good. Right? For the oil importing country levels, like was it's just at 67 kind of levels, very flattish down now. The flattish up moves happened last week slightly. Very flat close last week. Gold is making new highs, new all-time high. So that makes 85% of output from the previous go for the goals. So gold often moves up when we have trouble with the belief of people in investing in the stock market. Money is moving to a safer havens of investment goods. As a hedging instrument, it's good that gold is moving up. It will balance during the correction and help us survive. But the thing is, gold is breaking out means that money will getting shifted. So we have to worry slightly on that. Otherwise, with respect to the dollar cooling off, rupee gaining some strength, and crude oil cooling off, it is good. But what is not good is the global market, US markets. Global markets have a bearish, another nearly 2% of fall, 2% Nasdaq, everything is 2% fall. 3% Dow Jones fall, Nasdaq 2.4% fall, S&P 500 2.3% fall. So sideways and falling is what is happening. Sideways and falling is what is happening in the US market. US market is a mother market. So any fall or major corrections that happens from here seriously impact our market. We cannot be solely performing when the mother market is falling down. So there is some correction. So it's probably the third or fourth weeks of correction that's absolutely is not that high. And hopefully there could be some support that can come in this here in the Dow Jones at the 40,000 levels. But Nasdaq seems to be breaking and exiting. Right, so if a break that happens, it will back to IT index and another 12% of fall can happen from here. Big volume Nasdaq heavy selling. S&P 500 also a lot of space to move down the parallel channel. So you have to keep your fingers crossed on that fact of whether the US market is going to perform. Right. So otherwise, global gives a fine with respect to the dollar cooling off and crude oil falling down and currency slightly gaining, but US market down is not good. Gold spike up is also not that great news, something to be worried about for the equity market. Now that's about analysis. We've done a lot of analysis. Now let's try to have some actionable studies. So these are not recommendations. Trading or taking investment decisions is purely your discussion, your risk, your analysis, everything yours. This is only for education purpose. Two stock picks, both on the short side. One is info edge. This seems to be the potential that the cup and handle can break down from here. One is the score can come in because now it was dipped in the bear zones. Trend is rising up strength in the bear zones. Krishna Industries, I think it's a sugar industry or something. Also, there is a descending wedge breakdown from here as possible, which would give. I want to say towards 2200. So I should look one. Volumes are big. Even though it's dipped in the bear zones. Bearish trend is rising up to short side selling opportunities. Info Edge and Krishna. Another one is the weekly FNO Nifty options strategy, and this is a bear call spread. It's a call ratio spread. Sorry. Call ratio spread where you are selling double of what you are buying, both ODMs and for OTM is where you sell, and you protect the community on one side. That's on the downside. That's where the fear is. On the upside, you just have to get out. It hits the 22,800. As long as it's within this range of, you are safe. And if it moves up, also you're fine up to 22,800. So it's that way. It's partially hedged, partially risk defined. So not fully. If price moves above, suddenly spikes up to inverse 23,000, you have to get out, otherwise you will incur huge loss. So there's a risk here associated. So completely risk defined. It's a called ratio spread. Ratios 1:2 ratio. You can have 1:3, 1:4, whatever you want. But yeah, this is partially risk defined because the fear is in the downside, so you're covering that risk. That's it. Now let's try to wrap it up. So market went into consolidation mode last week, but in a volatile manner. Remember, it was attempt to recover the previous week that happened from the swing lows. At the same time, Banknifty made a new swing low this week after a long time, but it managed to climb immediately bounce up from there. So correction in the Nifty is 16 to 16.4, Banknifty is 16 to 12.45. But rally is about 70. We have to 70% of rally from the 22 plus 3 years or something, right? It means 2.5 years. So that's kind of rally that we're talking about, and now we're talking about it. Still, correction is not that big, especially in the Banknifty. Now, if you try to put all the different factors in favor of the bulls and the bears, bears has the fact that Nifty operates for the options is it's bullish still, and Banknifty medium-term momentum is not tipped in the bear zones, and it is yet to fall into the bear zones. That's the only thing for Banknifty. On the contrary, the expansion of the Ponzi band has happened in Banknifty, make a lot of that. Now, crude oil is falling, as I said, and dollar index is slightly gain. So, these are all things, few things that is there in favor of the post. But otherwise, yeah. So here another main factor is the Bollinger Bands, Banknifty expanding downside, right? So that does not happen. So that's a factor that's coming in favor of the fears. The price is selling continuously. US market is down. Gold is in new highs. Futures wires showing bearishness. Short bid up in both. Lower price actions there. Sectoral indexes are yet to recover. Medium-term momentum remains in the bear zone, so in the Nifty. Trend is bearish. We have seen all these things, right? I'm just bucketing the different factors that we have already seen. Heavyweight stocks are also sideways, not recovered fully. Broader markets are hit strong, and price is still below 20 and 200 especially. That's right. So caution need to be kept. Have tight stop losses, and there is a trade war and trade tariffs and all that. Yes, trade tariffs and all that happening. So things could turn out to be volatile. So wait for that to settle down. So volatility is natural when somebody comes out with some statements every weekend. So technically, market is still undergoing a correction. It's 16.4, not too much. Currently, it's only 12.5. So it's an ongoing correction that's happening. Market will try to bounce up in the midway. That could turn out to be a full recovery, or then that may not sustain and meet with resistance and then again make another swing low. So all this can happen. So there is no 100% way of understanding when the bottom, whether the bottom was found or not, or when the recovery will start and all that. So we just have probabilities that we have studied using all this that's in front of us. But overall, looking at the technical analysis, my conclusion is that market remains mildly bearish, not moderate, confirmed, yes. So some such correction is already coming. Keep in mind that technical analysis is what we have done. Whatever technical analysis goes for a top, so there is a black swan that comes in, like a war, pandemic, right? Recessions and all these things are out of our hands. Things could go for a toss. Keep that in mind. These are only probabilities that we talk about, not confirmations or anything. Now for the next week, 21,000, 23,500 is the level that I did for the Nifty, 27,000, 50,000 the level that I did for Banknifty. Now remember, we have to move about 26,000 on the Nifty and 54,000 in the result. It's quite far away. That's that's very far away, right? It's 4,000 points far away, and right, 6,000 points far away because of Banknifty. So that is where we can say that record is, and until then it may be consolidation by it may be expanding, it may be correcting. That's all that may happen. But finding the bottom is very difficult to say, because we had a very wild bullish rally that happened in the last 2-3 years. It has to correct. Now, how long it will correct? Last time it corrected 18% last year. 2022 it corrected 18%. We are not still reached that. If it was corrected with 12%, it could go and correct 20%. But anything beyond 20, we have trouble. And then you don't have to worry. You don't have to worry whether the bottom has come or if you miss the opportunity, we miss it. There is no way we can predict the bottom is found or not. These may be interim corrections that may be happening to make new lower low, or it may be a recovery that may happen. We never know, that what exactly is. We only bet on the short term based on the probabilities of technical analysis, which is not guaranteed. Mainly, right? So always keep hedges. Hedge is the only way to protect your capital. Capital is all that you have. Risk management is all what trading is all about, not anything else. Have tight stop losses. Hedge your portfolio, hedge your positions always, so that your capital is protected. And always use these hedging strategies and options to make some money also as a rental income, using the covered cash covered puts and all that. You can use it for investing also. Whenever there is a dip, so buying the dips in the SIP mode or lump sums, you can use dips to buy the stocks at a lower price of your desired price. You should cash up your puts and all that. Check out the playlist for all those videos that is uploaded earlier, and you'll understand all that. That's all I have for the next week. I'm active on the X and on a daily basis. To subscribe to that, I'm also there in the Facebook and other social media channels. So if you like the content, subscribe, come and give your feedbacks and share it to others, so that it reaches out. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.